Welcome to this week's Forex forecast for the week ending April 14th, 2023. My name is Justin Bennett with Daily Price Action. And in today's forecast, we're going to discuss the DXY, the US dollar index, the euro, the pound, the dollar versus the yen, and also the dollar versus the Canadian dollar. Now, before we get started, if you have not signed up with my partner, PrimeXBT, be sure to do so using my link here. If you're on YouTube, I'll put a link in the description. If you're on the website, use that link, that free access link at the top of the website. Be sure to use promo code DPA to get up to a $7,000 trading bonus. And when you deposit $500 or more, I will give you lifetime access to our Discord trading group. You're going to get 2 videos every single weekday, one on Forex, one on crypto. I'm also going to share my trades with you in real time. We discuss trades throughout the day, different charts and different market insights, and I'm very active in there every single day. So again, be sure to see the link in the description to sign up or visit the free access link on the website. Lastly, PrimeXBT does offer Forex, crypto, commodities, and indices. All right, so with that said, let's go ahead and jump into the DXY here, the US dollar index. And this is what I've been discussing now for the past couple of weeks, how I always thought that it was a bad idea to get bearish on the dollar down here, even when it was trading in this area, simply because we did have that macro support between 101 and 101.50. So sure enough, we saw the DXY bounce from 101.50 last week, and we also got a potential reclaim at 102.05. Now, this is a significant level, and before I get to the 4-hour chart, guys, this candle right here, I'm not really sure why TradingView is showing this, but they are showing 2 candles for Friday, probably because of the low liquidity on Friday. But essentially, this was Friday's candle, and we may have gotten a reclaim of 102.05. Now, that level has been significant ever since the candle here on March 22nd. So if we look at the 4-hour chart, you can see how 102.05 has been significant. You can see support back here. We got the close below and resistance here, resistance on Friday. And we did get a very marginal close above that. Now, the thing to keep in mind, though, is that it was a Friday where we got the close back above. It was also a very illiquid Friday candle. Okay, so keep that in mind that, for stuff like this, I tend to wait for the next at least 24 to 48 hours to see if the market is going to follow through on this. Okay, so if we see Monday close above 102.05 through here, then we are looking at a move up here toward the monthly open around 102.60, reclaim that, and we have the yearly open at 103.50. All right, so I mean, right now I am cautiously bullish on the dollar as long as it's holding above this macro support down here. But at the same time, I'm not ready to get aggressively bullish on the dollar until we see some bullish reclaims. Okay, we may have gotten one on Friday, but like I said, I do need to see something on Monday to really show follow through and also reclaim the monthly open up here at 102.60. If we start to do that, see the dollar up here on a daily closing basis, then this starts to look like a bottom within this range. And I do think that we're looking at higher targets here for the DXY. Now, alternatively, of course, if we were to see the DXY rotate lower, take out this area around 101, right? This macro support area down here, sustained break below this, then we are headed lower. But as long as the DXY is above 101, I am cautiously bullish. All right, so now for the EURUSD, which I'm still monitoring this channel, although we really don't have too much to talk about with regard to that because this level comes in all the way down here at 107.50. What I'm watching this week is, and I mentioned this last week on the website, is you can see that right here, okay, on this candle, we got the break above 109.30, and same thing back here in February. So this level served as resistance. We got the close above, close back below, and the sell-off. Okay, this up here became a fake out, right? A bearish fake out. And we may have seen something similar to that last week. Now, again, the key here is that this price action, okay, even Thursday was, pretty illiquid going into the holiday weekend. So I really want to see some more follow through this week to confirm that this up here is a potential bearish fake out. So I do have a small short position that I shared with members in Discord last week, right up here at 109.36. So I got a great fill on this wick right here. And I did share that with members as I took the trade. And what I'm looking for now to confirm this fake out and also add to that position is a daily close below this 109 area. Okay. Now we got it, marginally on Friday, but again, very illiquid conditions. So I do want to see some follow through on Monday, get a convincing close below this level here, somewhere down in this area. And that confirms that this up here is a fake out and also exposes that confluence of support around 107.50. All right, so just waiting to see if we get some follow through on this in the coming week. If so, like I said, 107.50 would be the next support area to keep an eye on. That would be a huge support for the EURUSD, key horizontal here and also the bottom of that channel. Now, alternatively, if we see a reclaim up here at 109.30, so get a daily close back above this, We're looking at a run back here toward this high and potentially up there toward the year-to-date high around 110.30. All right, so for the pound, we have some really clean technicals right now. The market, appears to have given us a fake out up here at this, what was resistance, flipped the support for a couple of days, but this does kind of look like a failure. All right, now, once again, I sound like a broken record, but this was Friday, very illiquid conditions. So I do want to see follow through this week, but as of right now, this could be a bearish fake out, similar to the bullish fake out we got down here, right? So we had the range lows, and that was taken out on these two candles. We got the close back above and the rally. Okay, so if this plays out the same, right, and we get confirmation this week that this is a fake out, we get a close down here somewhere, this is a fake out, we get that move lower. Now, if that's the case, then levels you're going to want to keep an eye on are going to be 122.90. All right, so you can see this little pivot through here. So 122.90, we've got this mid-range around 122. Okay, so this is essentially the 50% level of this range. And then we've got levels like 120.50. All right, so small pivot through this area. All right, so, right now, jury's kind of still out if this is a fake out. I kind of lean to the side that it is, though, just given the fact that the market really wasn't able to bounce from this area. Typically, what you would see is a move up, rounded retest, and then an immediate bounce higher, right, to show demand in that area. But as it is now, the market just kind of trickled into this area, had trouble getting off of it, and last week appears to have closed back below it. But once again, we'll have to wait and see how this week opens, how it trades in the first 24 hours to really confirm if this is a fake out or not. All right, so the dollar yen I mentioned last week, and I also told members that this pair looked pretty favorable when it was down here. Okay, so I mentioned this in the members area when the dollar yen was trading right around 130.93. Okay, so in this area down here, I said that the risk reward to the upside looked really favorable. And sure enough, we got a bounce here on Thursday, some follow through on Friday. So it does look pretty good to the upside. Now, the one thing I will say is, right now the dollar yen is still just range bound. So if you'll remember from last week's video and previous blog posts on the website, this level at 132.90, this is the key for the dollar yen to get above. All right, so we saw the market try to get above it here. We saw some long upper wicks. That triggered the pullback here into 130.70. So 132.90 is going to be key this week to break. Okay, get above this on a daily closing basis. We're looking at 134.40. All right, and you'll also notice that this price action right now looks pretty similar to what we got back here, okay, within this ascending channel. So this is an equidistant channel, and so far we have the retest of support right down here, right? We got the rounded retest, higher low, all right, and the bounce. Now back here we got the same thing, right? Retest, higher low, and the rally, okay? So as of right now, it does look pretty similar to what we got back here. But once again, 132.90 is going to be key this week. Need to get above that to expose 134.40. Alternatively, the failure here is also very clear, and that is 130.70. This level down here, okay? This is key support. A close below this area would open up 128, all right? That would mark the failure of this pattern and also that higher low that we got last week, okay? So that's the invalidation, 130.70. Even the bottom of this channel here, I would want to see hold on a daily closing basis. But ultimately right now, given this structure here that we're seeing, this channel, and also the potential higher low that we saw last week, this does look relatively bullish for the dollar yen, but I do want to see some follow through this week. And last up, I want to touch on the dollar versus the Canadian dollar. So you guys will remember that this was the pattern that we mentioned that I talked about a few months ago. So you can see that we have this trend line from July of 2021, and we got the retest right down here in this area, right around 133. Okay, so support here, support again, double bottom, we got the rally. Now, the market also broke out from the October trend line back here in February. All right, so I also mentioned this on the website, talked about it. We mentioned it, talked about it in Discord as well with members. We had the breakout here, 300 pip rally, right? So that was a very clean breakout from that October trend line. And so far, last week, we did get a rounded retest. Now, this was a very aggressive retest, okay? No doubt about it. I mean, this right here was a very aggressive pullback. However, at the same time, we did see bulls defend that 134.20 area. So in Discord with members, I mentioned when the market was at 134.20 down here, I said this looked pretty good. All right, we got a retest down here, looks pretty good for a decent long. And sure enough, we got that move up toward the monthly open at 135.16. All right, so you can see that going back here in this area, this was resistance again, support, and this little pivot through this area. Now, Friday tried to close above that, but you can see that it didn't quite make it. So I do want to see some follow through this week. A daily close above 135.16, that monthly open, would expose this pivot right here. Okay, so right around like 136.50. Alternatively, if we get a rotation lower early this week, so a pullback, I would keep an eye on 134.70. You can see that back in this area, we've got a lot of highs and this closing price. Okay, so 134.70 is going to be near-term support. Close above 135.16. I think we get that move up toward about 136.50. All right, so that's it for today's forecast. If you enjoyed it, be sure to subscribe to the channel, smash that like button, and also sign up with my partner PrimeXBT. Use promo code DPA to get up to a $7,000 trading bonus. Deposit $500 or more and get lifetime access to our Discord group. See the link in the description, or if you're on the website, click that free access link. Have a great rest of the weekend. Happy Easter, and trade well out there next week.